my one setup for life. So as we know, ICT has his own one setup for life. I have mine. They're different. Okay. This is my one setup for life, and I'm going to be explaining to you guys what this is. This is going to be the notes only. I actually go over the one setup for life model in the other one setup for life video. So make sure to watch that. Okay. So mine is different from ICT's, as we said. We all have our own setup that we like the best. And this is what I call my one setup for life. It doesn't happen a lot, but when it does happen, it's very good. So I always pay attention to the days. We have Red Folder News at 8:30, okay, mostly. And 10 o'clock does work sometimes, but rarely. And then the other data lows I like is FOMC lows and highs. But again, I'm not going to be teaching off that. So um, I look for price to either purge the 8:30 high or the 8:30 low off the news. Okay, it has to be off the news candle, the 8:30 1 minute news candle. And whatever high low was not taken, okay, the other high or low left that was not taken has to be like a big giant wick. Okay, so a bigger wick than usual. So for example, like here, okay, we have our again, we clearly have a data high here. So this would have to be the this would have to be the size of the wick. You can see it just stands out a lot. Okay, even this one. Okay, this one as well. Okay, and this is actually our one setup of life from today is actually still playing out. There's equal lows down here, so we'll see if that hits. But you can see right here, this is the wick you're kind of trying to look for. All right, you have to be looking for this wick in general. All right. So I look for price to trade away from the wick and create a fair value gap to the opposite side. Okay, so let's say we create a low and high and it's off data, right? I'm looking for price to take out, let's say, the high, keep trading above the high, right? I want price to keep trading away from the high, and I want us to create bullish fair value gaps. And you're probably like, well, if you're looking for the data low, if you're looking for the opposite low to hit, why do you want bullish fair value gaps? Well, that's going to be your opportunity later to allow us to enter, okay? If we don't get any bullish fair value gaps, well, then there's not going to be any violations of anything clean, and we're not going to be able to trade back to the data low. So you have to see fair value gaps, all right? So I then wait for my inversion model, okay, coming back the other way, and I target the data high or low that was left. And usually 80% of the time, this usually does happen after market open. Only sometimes it does happen before open. So from 8:30 to 9:30, but typically after. So the best possible one setup for life, it will leave a data high or low. It'll trade away from it until about 10 a.m. And then 10 a.m. is when we'll get like a really clean setup or reversal. Okay, 10 a.m. is a very good reversal time. And it doesn't have to be at 10 a.m. It could be from 9:30 to 10:30, but generally 10 a.m. would be the best. Okay, but it can be any time. So this setup probably happens. I would say it's happened quite a bit the last like month. I think it's probably happened like 3 or 4 times, but typically in a normal month, it probably happens like 2 or 3 times. Sometimes more. Sometimes I've only seen it like once, but typically it happens at least once, but about 2 to 3 times an average. So even though the setup doesn't happen a lot, it's obviously a model that is kind of like my inversion model, but I tend to go a little heavier when I do see an inversion, when I see the one setup for life, just because I know it's very worth taking when it appears, and the accuracy of this model is very high. So again, and the reason why this actually works is whenever we get like a giant wick like this, okay, that's very big, um, oftentimes this wick was so fast where we fail to fill orders in here and there's like zeros at the bids and ask, and the market is going to want to go back down there and reprice and rebalance those orders. Okay, you're going to need to see filled orders everywhere, and that's just the nature of an efficient market. Okay, an efficient market is going to want to have every single order filled. All right, so that's why we usually go back, because there's failed orders that don't get filled down there. So this is the model of my one setup for life. Okay, this is like the general base of it. So you can see this would be a data high, this would be a data low. So you're looking for the data high to get traded away from. Okay, you want to see us trade away from it. And you want to see a very big wick. Okay, you want to see a very big wick on the side that's getting traded away from. So in this case, we're trading away from this big wick, okay? And it doesn't have to be necessarily big. It just needs to be like big so you can like see it, and it's like kind of abnormal to compared to other wicks. Okay, and it has to be at 8:30. So this is the 1 minute candle. This is at 8:30. It's the time when Red Folder News comes out, and I've seen these work fine for FOMC, but typically it's the best for 8:30. All right. So we trade away. We get some sort of bullish for rally gap at the top. Okay, this is for a bearish setup, and then that bullish for rally gap we get is your entry when we break it. So when price physically closes below that, that's your entry. And of course, an SMT at the top is optional. You don't need it every time. And of course, a higher time frame PD array violation is, or a higher time frame PD array is optional as well. Although it obviously is going to be better with one. And usually we do. I mean, it's kind of a given, but usually we do purge some sort of liquidity here to the left before dumping in the first place. But again, rejecting off a higher time frame for every rally gap or a liquidity sweep at the top is typically what you want to see. And then again, this is the bullish for rally gap. You want to see it turn into an inversion. You want to see it violated, and then you're entering in the close there. And remember, if we already take out some sort of internal liquidity, do not enter this. Okay, ideally, you want us to not take out some form of internal liquidity first. It should be before, all right? And I already kind of talked about this in the inversion model video, so go watch that, right? So I would study this model. Okay, you're gonna need to look at this a few times. And by the way, people wonder, do I enter in the retracement or do I enter in the close? In the one setup for life, I still enter in the close as long as the risk reward isn't terrible. If we close down here and we still haven't hit some internal liquidity to the left, so we close down here, I will wait for the retracement. But if we close like a little under the fair value gap, I'll still like kind of enter it. All right, I'll mark it, sell it. So this is what I prefer. I prefer some sort of bullish fair value gap. I prefer us to get healthy structure when we trade away from the wick. So what this means is I prefer us to get a few higher lows and higher highs first. So you can see higher high, higher low, higher high, higher low, higher high, higher low. And then we violate this, and then we violate this. And this is what I prefer. Okay. Now you're probably wondering, like, why? What's the other option? This is what I don't prefer. This one just has a single bullish for rally gap trading away. It doesn't even have any new higher lows, and then we just dump, and it just, yeah. So I like to see a little bit more structure kind of go to the upside, and I like to see that structure violated rather than this. We don't really violate any structure, and this is much lower win rate. So ideally, when you're taking these setups, you want to see decent structure trading away rather than just straight up and then right back down again. Okay, and there's no swing lows formed here. And yeah, you'll probably see a setup like this eventually, and it's not the greatest. The risk reward kind of sucks. You can get much better risk reward with healthy structure as in here. This is fine. I mean, yeah, this is fine. Okay, so this one, I won't enter this. Okay, you're probably wondering what's the difference. Well, this one I won't enter, but if we get a confirmation set up like a higher low here, see how we get a higher low here? If we get a higher low here and then break that inversion here, I would not mind entering this. But this is the only exception to, okay, if we don't have any structure here, as long as we do get some sort of higher low, okay, I like price to violate it, and then I'll obviously take the trade there. And of course, we could get a manipulation leg here. And if you remember what a manipulation leg is from our structure video, it's just when we get a new high here, then we dump. Okay. And again, if the bullish FVG did form here, I would take this since it's a new low with a new fair value gap that's not the data low. So you can see we have to get a whole nother fair value gap here after a higher lows formed, and then I would take it. Okay. I'm not just going to take this one. I'm not going to take the first fair value gap that trades away from the data low. Those are definitely hit or miss and a lot lower win rate. So here's an example. So we form a very obvious data wick right here. We form a high and a low, and we trade away from the high. We get very healthy structure here. Okay, healthy structure. We get a higher low here, higher low here. And because we get a higher low here, this would be fine to look for the setup. But what do you notice? Price does not close below it. And I always say, look for the obvious ones, okay? These are not really that obvious, all right? This is the obvious one. These are not the obvious ones. This is pretty obvious because the speed going back up. And then this is pretty obvious. So in this situation here, what you'd see happen is here would be your first entry. I would probably wait for the retrace in this one because it's so close to the internal liquidity. And what would happen in this one with how I trade is you would have hit the internal low, first internal low, and you would have gone stop the break even. Okay, which is fine. Why do you get stop the break even? Well, that's market open, and market open typically is, if the bias is bearish, we're gonna get market manipulation back to the upside and then go down. And then the second entry we get right here, we can clearly see we barely close below it, but we do. And again, this is actually a BPR, which is one of the strongest PD arrays. And it's a BPR because it's a bullish and bearish river. I get to line up with each other that wasn't filled yet. So when this is filled, it becomes a BPR and it fails to hold it. So this would have been a fine entry. And then again, you would have just targeted the dead lows like before. And in this situation, you would have moved your stop to break even probably after we swept this internal low. And you can see it just doesn't even come back to stop you at a break even. And the other thing about this setup is we were rejecting off of a 1 hour OB on the higher time frame. So that's really nice. So this one, another one. So we swept sell side here. This actually happened a few days ago. So we swept sell side here. Not a few days, like a few days ago at the time of making this video. There's an SMT at the bottom, meaning NQ took out its low, ES did not. We get a lower high and then another lower high. So we get healthy structure down here. And you can see this is a much quicker one than this. This one took a lot longer to play out, all right? And you can see we close above. That's your entry. Stop losses, a close below the IFEG, and then your target sees at a high. So I know it doesn't look like we entered above this. Okay, I know it doesn't look like we entered above this, but we still did. It's still valid, and then you target the dead highs. And again, you can hold runners for like a London higher if we've equalized above, but typically I don't. All right, so that's it for this video. Let me know if you guys have any questions. I do actually want to go over the one today. So the one today was not actually a one setter for life because we formed, I mean, here's the thing. Look, it is a one setter for life, okay? And what I'll say is this. This is up for your interpretation. So we form a very big, okay, data low here, and we have a big data high here. And we take out the data low, so we know price, we were on to look for the data high. However, this candle was so big where obviously the risk reward by the time you get up here is going to be horrible. So what you can do in this situation is you can look for like a new bearish river rally gap, such as this one, and then take that one. Okay, so that's fine, but it's all up to your interpretation. This would have been way better risk reward, but you can still see we take out the data low from today. This was NFP. We kind of get a new one setter for life here, and you're probably wondering why isn't this valid? Well, this isn't valid because we hit the internal high right here. We hit the internal high and then come back down. And I know you're thinking, oh, this still works. Yeah, it does still work, but if we hit the internal high, then come back down, I don't enter. I need to make sure price does not hit this internal high, and then I can enter. So this wasn't valid. But this one was definitely valid because we did not hit that internal high. Okay, so you can see price fails at this high, and this would be your entry, and then this would work fine. So this is actually from today. And yeah, that's going to be it for the end of this video. Let me know if you have any questions about this video specifically, because I know some people can get a little confused. And your assignment for this video is find me one setup for life that I did not show in the examples and explain and mark up the chart and show why it's a one setup for life.